Thanks, Yorm, for having me. Always a pleasure. We're going to go through a deck here. This is the deck that was presented a couple of days ago at a conference in Perth, the RIU Explorers Conference. I'll just go through the statutory disclaimers. Now, Sunday Creek is a discovery here that we're going to be talking about. It's in Victoria. I owned many of these assets some time ago, and I'm sure we can talk about those when we move on from the deck. I've spent the last 25 years exploring around the world and made many discoveries. And then I've come back home literally within kilometres from where I grew up and made this discovery here with the team called Sunday Creek. Sunday Creek is in the shadow of the headframe of Fosterville, the Victorian goldfields, and it looks like we're on another one of those systems, and it's just a very exciting discovery that I look forward to talking about over the next 15 to 20 minutes in this deck. So what we have is a discovery. How do you measure a discovery? The way that we like to do it is talk about the hit rate. So 100 gram meter hit rate, let's say, which is the grade times the width in the drill hole, is a good measure of saying, is that a really good drill hole or is it otherwise? So 100 gram meters is a pretty good threshold, let's say. Newmont once told me 3 of those hits in any one coherent body was a bona fide discovery for them, the largest gold company on earth. What we have is 25, but importantly, we've got 25 divided by the amount of drilling in this deposit to date, which is about 45 kilometres. So you get a strike rate, and I can't see anything better in the gold space at the moment, and in the data sets that we've been able to acquire from initial discovery. So it's right up there, if the best or one of the best discoveries on that measure alone. That's one way to look at it. So we know we're off to a good start. In terms of the strategy for the company, we're demonstrating grade. So it's a very high grade system, without a doubt, and you'll see that in the results. So now we're focusing on those better parts of the system, and really trying to understand those. We're still making it very much bigger. So at the start of the discovery, we're still at the start of that Lasson curve. We're moving up that as we continue to build more and more volume to the system. And big systems have big footprints. That's what you want to see early days. You want to see evidence and smoke, if you like, over large distances. And so we've got a system over 10 kilometres, even though we've focused to date only over 1 kilometre. So we've got room to move into 9 times more of the volume. How do you make discoveries? That's what my career has been all about, trying to make discovery. And there's a few simple rules. You got to drill. That may seem very obvious, but you can't drill without the money in the bank, nor the permits. And that's the perfect mix with the money and the permits. Drill when you're onto a good system, and that's the mix exactly what we've got here. So we've got 4 rigs at site as we speak, and there's always news flow, of course, as a consequence of having those 4 rigs turning. In terms of the capital structure or the corporate structure, there's a couple of things to note here. The company has become was spun out of a company called Mawson Gold. Mawson is a Canadian listed company, a company I co-founded, a company that I still chair today, and Mawson is a 51% holder of Southern Cross. That position held by Mawson is escrowed, and Mawson has stated publicly that it will distribute its shares to its shareholders post that escrow. So that's a process for Mawson to go through from May 16 onwards, a plan of arrangement and a shareholder vote. The key point to know when you're going through a distribution is that you're distributing to strong hands. And that's exactly what we've got for a vast majority of Mawson. We worked very hard to mimic the shareholding between the two companies. So Southern Cross's major shareholders are Mawson's major shareholders. So something like the 70% overlap now between the shareholder base. And Southern Cross has changed dramatically over the last 6 months as we've really created this wonderful discovery, and it's become much more institutionally bought. In Australia, we have full transparency, which is a great aspect of the ASX, to see who's buying and selling shares at any one point. So I get a list daily to see who's buying and selling, so you can manage your register. And I know through managing that risk that, or managing that capital structure, that it was very much a retail IPO. And then just over the last 6 months, it's been accumulated by institutions, and some of them are listed here, Australian and US and European owned now. If we just move on, this is the database in one slide, basically, just to try and highlight what we've got and how it's been changing over the relatively short period of time. So the top 10 intersections are on the left. The length down the drill hole length, the gold assays, and antimony. Antimony is a key part of the story. We say gold will pay for it. It's about 80% in situ value. The antimony is probably the most critical metal that you've never heard of, is the standard line that we say about that metal. We'll talk about that, but it's very much, this is can be and could be one of the Western world's largest antimony projects, even though it's only a byproduct for us. So we'll talk about that a bit later. But you can see the amazingly high grades of gold, and the lengths are very good. So the other key point is that most of these top 5 at least come in the last 4 months. So it's very important to understand that we have the top 5 that have come very recently. Now, shoot across to the right-hand part of that page, and that's a measure of time on the x-axis. So this is where we listed the company in May 2022, so we're about 21 months in. And this is just an exercise on taking 26,000 assays, cutting them with a lower cut at 2 meters carrying 1 gram, which is a fairly realistic underground cutoff, and then only looking at those intersections that have greater than 5 gram meters. So that's another way just to filter those economic intersections. So looking at the economic sort of criteria, our width of intersections has stayed pretty consistent over time, about 4 meters. That's just a numbers game. It's not how they all sit spatially, but the width has stayed the same. But you can already see the grade has done something very special, and from about a year ago, it's just continued to get better, demonstrated by the results. Obviously, very high grades will take that average much higher, but that's exactly what this deposit's all about, finding those very high grades. So that's what we've been doing. Why is that so? Well, I think we'll go into that in just a bit more detail, but in summary, we understand the system. So you always want to see good systems always get better. You certainly wouldn't want to see the grade doing this the other way, because that would suggest that you're just in a supergene enrichment, or you've got a little pod that you've hit and you've never been able to replicate it, etc. So good systems always get better. Our understanding is getting better, so we know how to target that grade, like I mentioned before. And then there's a large good fortune in this in that the project is developing as well as it has, and has gone above our expectations at many points over the last 6 to 12 months. So that's a great framework. But now let's get into sort of the geology. So talking regionally around Victoria. Victoria is a supersonic part of the Earth's crust. It's delivered about 1.5% of the world's gold. In the 1800s, 1851 was the start of the gold rush. It rivaled California for who was putting out the most gold through those 1850s. It built Melbourne and essentially Australia and the expansion of the English Empire. 80 million ounces came out, and there's wonderful history and heritage all around that in my backyard here. The challenge has been on the re-establishment of those mines in the modern day from about the 1970s. This style of mineralization, which formed in the geological time called the Ordovician, have a very high CV. What's a CV? A coefficient of variation. It's a measure of the erraticness or the consistency of any data set. It doesn't have to be gold. It could be cars on the road or whatever. So the CV, if you're under 2 is very good. Under 1, it looks like you've got water or something like that. Above 5, neither points ever relate to each other, and that these have a CV very high, way above 5. So they're hard to put modern day mines around, even though there's a lot of gold there. In a geological time, let's race forward 70 million years. 70 million years to a period called the Devonian. That's when another style of gold developed in Victoria. It's called an epizonal style. And what made this famous is Fosterville. Fosterville has been one of the highest grade gold mines, I think 4 of the last 6 years on Earth. It was the highest grade gold mine, producing at 40 grams per tonne. The average gold grade worldwide is 1, so it's 40 times better. Excuse me. And it was the lowest ASIC, so lowest cost mine, and it was a top 10 producer. So we're not just talking about a little mine that just produced a little bit at a very high grade. It was one of the top 10 producers on Earth. So that brought hundreds of millions of dollars of exploration back when Fosterville was essentially rediscovered, because it took them 20 years to find these supersonic parts of the system that developed at depth. And we came back, and I own many of these projects, like I said, 20 years ago, trying to tell a Fosterville Mark II story, and the timing was poor because Fosterville wasn't the analogue that it is today. There's another mine called Costerfield that is also one of these systems, and here's us at Sunday Creek. So these systems are different. They form low CV deposits, so low coefficient of variation. They're not nuggety. They can become very high grade, but high grade doesn't necessarily mean nuggety, of course. And then they form very great mines, as demonstrated. So it looks like we've got the next one, very much so. And when you get into one of these systems, it's a key point. And this is standing on the shoulders of giants, I say, learning from Fosterville. So it doesn't take us 20 years to find the next one. Is we know that you need to go deep early. Why is that? From about 700 metres down, more or less, there's a transition in these systems geologically, and it's the most important part of understanding the economics of these systems and why they can. Fosterville was delivering $1.5 billion of free cash flow a year, and it was all because of this, and it was all because the system translated from brittle to brittle ductile. So brittle being like if you smash a brick and it all breaks up. That's brittle deformation, and all the gold would fill into the fractures. If the brick was less cured in a kiln and more clay-like, and you could actually smear it, that's a ductile structure. And it's those smearing structures, essentially the ductile structures, when you get into the deeper parts of the system, that form these amazingly high grades. And that's driven our thesis, at least, to go deep early. So look for these things and go deep is essentially how you need to explore these systems. So it gives you some context while we're drilling kilometre holes pretty consistently and from the early days. It's all about the gold. So I'm just my presentation's just loading up here. There's a lot of gold in this sample. This goes 4,000 grams, this sample, and there's many samples going over 1,000 grams. We'll come back to that bit of core, and that comes from this part of the world, which is Victoria. Here's Melbourne, which is a place I live in. Right now I'm speaking to you from. Sunday Creek is here. We're about 60 kilometres north of Melbourne. Here's Fosterville and Costerfield for reference, so about 70 kilometres from Costerfield and about 100 from Fosterville. The green are those high CV Ballarats and Bendigos, so very erratic deposits that are hard to put modern day mines around. The orange are the epizonal deposits. So you can see they form in a different part of the state. And that's a key point. When you're in the orange, go deep. The project is amazingly close to Melbourne, as you can see. We can get there from an hour from the centre of Melbourne. It will have a number of very positive implications for this project, where not only will we be able to have a very strong local population and a lovely regional centre, For those, there will be a part of the workforce, I have no doubt, that will commute from a major city, which is a very unique point in this industry. That doesn't happen that often. The other point is that it's far enough away not to be too close to population. So it just happens that this is on the edge of where there's been traditional farming through generations. So it hasn't developed like a lot of the state has, where you get people commuting the other way back into the city, and you have 50 or 100 acre property farms, and that hasn't happened en masse. And in fact, if you go from our project south, it's essentially there's not a house to be had. So it's a relatively undeveloped part of Victoria, and that's one key part of really keeping your life a little bit simpler in this state. So what we have here now is just a simplified tenement situation. Here's Sunday Creek, here's Fosterville, here's Costerfield. We do have two other projects in the company, in two other epizonal projects. We made bona fide drill discoveries on those assets, but they don't stack up to Sunday Creek. So we really focus on Sunday Creek, but we do have the strike extensions of Costerfield, and those two other assets do have value, and we'll work through how to unlock that as we go forward. But let's just focus on Sunday Creek, which is the main game. Here's the exploration tenement in space. We can see the scale here is 2 kilometres. So that's quite a large tenement package that we have. The key area for mineralisation is the stars. The stars are the old mines. So we didn't do anything too clever. We understood the style of mineralisation we should be going for, and we went deep early. But these were mined for 50 years, this project. The key areas are about 1 kilometre here. I said it before, big systems have big footprints, and this is what this does. There's regionally, there's mining along this one structure. We'll talk about that in a moment. The ladder extends for 10 kilometres, and there's parallel ladders. So we have more here and here. So the exploration upside is vast, and if we just zoom into one little layer closer, we can see that in a different way with all the old mines, the soil sampling being the bars there, and here's our key area down through here that we've focused on. So the trend you can see is up through here all the way for that 10 kilometres, and with the parallel trends as well. So lots of exploration upside, and I'm sure Kenny has gone into that. The simplified version of the geology is this presentation. So let's just go and have a look at the key area here, just this little circle of about 1 kilometre, where we've been looking at how the geology really works. And here's this ladder structure that you can see that we've demonstrated here. This is a 400 metre scale here, and what we're doing is we're looking down bird's eye at a plan view. So what we have here is the mineralised host structure. Mineralised host structure has the bounds like this. This is what extends for those 10 kilometres out bush, and has the parallel zones that we talked about. The host is very well defined. We know when we're coming into it, we know when we're going out of it, and it contains all the gold. We've only missed it in 2 holes out of 100. Very targetable. So that's a key aspect of this system. The other point is that when you're in that host, between the rails are the rungs. And the rungs are these vein sets. And these vein sets are on average 2 to 20 metres. 2 to 20 metres wide. They're 20 to 100 metres long. And they extend from surface right down to 1 kilometre, and we can trace any one vein over 600 metres, and only limited by drilling at the moment. When we have the data to inform us, lots more drilling, and we have lots more drilling in, say, this part, we can pull out the very high-grade cores, and then there's always a lower-grade salvage, 2 to 10 grams. The old timers, the 50 years of mining only focused on that sort of plus ounce core. What we can then do is see what the geostatistics tell us, and that CV, or that coefficient of variation, 1.5 is the CV when we're in this area. So it's showing us that we have very good, consistent mineralization. It's not nuggety, and that the model is somewhat reflective of the truth of reflecting Mother Nature. We have 42 of these vein sets today, the rungs of the ladder. 3 or 4 months ago, we had something like 30. So we're finding more all the time, and there's a hell of a lot more to be found. So that's the secret in terms of how this system works. In terms of the width of those veins, it's a cut-off question. So at a higher grade cut-off, you're looking like the very cores, the sort of 0.5 metre to 1.5 metres. At a 2 metre 1 gram cut-off, you're looking at 2 to 5 metre thickness, and then a lower grade cut will be up to 20 or 30 metres. So that it goes to the heart of how this will be mined and at what cut-off grade it will be mined, and whether it'll be thinner high-grade veins or more bulk tonnage mining. So we're going through all those studies now. So if we just go back to that little piece of core, it's all about the gold. Let's just see where that came from. It comes from about 500 metres down. And here we have the drilled area. Now we've got the surface here that we can see. And what we're looking at now is some of the old mines, as you can see here. They mine down to about 180 metres here at this area. Along the field, only about 40 metres. Down here, about 500 metres away, there was another mine. And down, you can't really see it, but in there, there's a mine down to 100 metres. So that was the 50 years of mining. We'll take off the surface, put some numbers on there. And you can also see the black holes are those that we've reported. The yellow dots are all plus 15 gram hits, 15 gram gold equivalent hits. So you can see that there's lots of high grade in this deposit, and it's distributed right through the area. The other point is the yellow holes are those in the lab. So we've always got holes and news flow coming with the 4 rigs. Now, some key aspects, without wanting to pull out absolute numbers, but here's hole 82, for example. Lots of high-grade structures that you can see are consistent, and I'm sure Kenny would have gone through a couple of these. That's the one from surface down to 600 metres that we can trace, and it remains all open, of course. We'll have a look at hole 82. I think it's just worth just looking at the results. So this is hole 82. You can see it was 300 metres at 7 grams gold equivalent. Just around 7 grams gold too, with the antimony component. The way to read this is that these have been cut at a lower grade cutoff. So you're seeing wider zones. The true thickness is about 50% of the width in this hole. So halve the widths to get the true thickness of those veins. So you can see here we have something that's 13 metres, something thinner, and you get something very thicker. And they've all got these high-grade components. So that's actually 4 individual vein sets that have come together, and they form quite a wider zone, something that's 65 metres down hole, so 30 metres of accumulated veins. So you've always got this lower-grade halo with these higher-grade veins within it. So that's how to read our results. The other key point in how to read our results, and I'll just go back to that 3-dimensional model here, is how we've been drilling this project. So if we just take this and we look back down in plan view, like we were looking before, when we looked at the ladder image, we have the sides of the ladder, or the rails of the ladder, and the rungs are like this. And so in this case, the rungs are those grey bodies that you saw there before. Now, the black holes are the ones that we've reported. The yellow ones are the ones that are coming into the lab. And now you can start to see how we've been drilling this. So north, this way, we're looking down in the bird's eye view. You can see all the black holes are being drilled this way. And that's so we can map the structure, that host structure, so we know where we are, because we know that contains all the gold, so we've got to map that out first. When you drill in this way, you go through a couple of the vein sets, you might hit a 20 or 30 metre intersection of gold when you cross the host structure like that. All that hard work was done at the start of 2023. So the first 6 to 8 months of 2023 was to map that that host structure that's about 200 meters wide down to 1 kilometer. So we know where that is in space now, and you can start to see now what we're doing in the yellow holes. We're drilling back this way now, or this way. I'll put it on another color, that way and this way. That we're staying within the host structure, so the sides of the ladder, if you like, for the most part, and going across the veins or the rungs like this. So we hit hundreds of meters and multiple rungs of the ladder as we hit like that. So it really is the secret in drilling this out. If you know you're in the host, and then you can stay within it, then you can drill more ounces per meter, and it's a much more effective way to drill this. Lowers your cost of capital, increases your share price, ideally, because we're not having to raise a hell of a lot more money just drilling it in this orientation, which would be quite tough because there's so many different structures to focus on. We're here to make this a lot bigger, and we can do that with less dollars by drilling in that orientation. So it's also important to understand those things when you're looking at a mineralized body. So what do we have here? Let's just take off the numbers and make some assumptions. So what we have is less information through here. We know there's a mine here with 20 stopes and another one here with 10 stopes, and got some very good hits here. So the mineralization should continue is the thought. If it looks very much like this did a year ago, and certainly the mineralization continued through here. That we know that the mineralization gets better as you go to depth, and we've talked about that. And we've taken some very special step outs. This one was a 500 meter step out below this area, for example, but we know a little bit less about that. So this was a 500 meter step out, and this is obviously the key area to drill into. Now, if we just extend some of these veins down to where we've hit them through here, but take off the areas we know less about, and take those veins off, or the rungs of the ladder, and this is the exploration target. And so we know, like I said, that we've got lots of mineralization here, good hits through here, step outs through here, but we know less about those areas. Here's the exploration target that we've been defined to date. If we just say, well, there's areas where we absolutely need to explore, and we're starting to find more mineralization out here. We know the system continues for 10 kilometers that way, so it's going to get bigger. We know the system can at least double. This is down to 1 kilometer, but we know these systems go to 2 kilometers. So you can start to see the dimensions now and how this is coming together. So what's in the blue? The blue with all the caveats around an exploration target. Too early to put it into a resource yet, but well constrained to drilling. A couple of assumptions, assuming the veins continue down to where we found them. A cut at a top cut, so very constrained within a geostatistical sense. So it's far from guesswork in its absolute sense. It's got 43 kilometres of drilling, and we found 1.61 to 1.6 million ounces of gold in that area. We've got with a range of 2.7 to 9.7 grams per tonne gold. You can see that blue area is a very good start, but it's already outdated because we're drilling. And you can start to see that it's maybe half to a third of the way there to a target that's much bigger. In the yellow and the blue, we see it going to 3 million ounces. That's our aim. Just in that slide, we know it can absolutely go to depth, and it's not our job to drill it out beyond 1 kilometre, but we will put holes down to show the system continues. We will be exploring along the strike, and if we find any more of these, the upside is then to get a lot bigger. And if we find the 3 million ounces in that area towards the top end of the grade, which we think the grade will continue to get better because of that harsh top cutting. But let's see, when we drill, it's got to get better at depth like it has here, and it's getting better at depth here already. That's a very rare asset. 3 million ounces at 10 grams is something that you don't see very often. When you head to those kind of numbers, we see them valued at anywhere between $400 to $600 an ounce as you've de-risked them and scoping to pre-fees sort of levels in Aussie dollars. That's Aussie dollars. So that's our pathway to a $1 billion company. In terms of the infill, and it comes down to strategy, and perhaps we can talk about that when we get off the slide deck, how we focus on drilling out the resource or moving into the exploration upside is a great intellectual question, because certainly we're not going to drill the bejeebers out of just the resource and focus on not making this bigger, but we of course can't go out bush and just drill lots of holes without trying to make the resource area or the exploration target more firmed up. So it's always a balance of the two. We need 40 kilometres to infill that blue area, and the yellow area, we'd say another 20 kilometres to go to exploration target Mark II, which would give us that sort of 3 million range between resource and exploration target Mark II. That's about an 18 million Australian dollar budget, and with 6 rigs we could achieve that in a year. So you can see that this project is developing amazingly quickly. 80% of that exploration target came in 2023. So we've produced already something very rare and high grade. Now, with all the caveats, like I said, around we need to collect more data, but we're in the ballpark, and we know that we've got something here very significant. So that really is the geology, and we know we can go further out, and we've got that larger area. And I just like to do this now, because you can see the 10 kilometres, and then you can see where we have drilled here is only a very small part of that trend. So we're just literally touching the surface. Antimony, I've talked about, will permit the project. It will. It's the most critical metal that you've never heard of. It was what kept this mine going during World War One. Actually, it was mandated by the UK Imperial Munitions Act during World War One for the colony of Australia to keep its antimony mines open. This was one of the few that was kept open. Excuse me. And so it's been a critical metal for a long time. Antimony is used as a fire retardant. That's been its traditional use, and it's about 50% of its use. It's nearly 20% of global antimony now goes into solar cells for clarifying the glass. But what makes it very strategic is that it hardens metals and hardens lead specifically, and it goes into munitions, of course. And now with the way the world's changing, of course, and sadly, the munitions stockpiles have been used up in the last year or so with what's happening closer to you, Yorm, than here in Australia. That the US and the West are looking for a supply chain in this critical commodity, with a lot more interest than before. Russia and China control 82% of the antimony market. And if you don't have antimony, you don't have a munitions business. So this is seriously one of the largest projects, if not the largest in the West, and where it's going. We've already got in that exploration target. Those grades were gold equivalent. They're about 20% antimony. So we've got 50 or 60,000 tonnes of antimony. And if it triples, there you're going to 150,000 tonnes. So you can start to see where this project may head. Australia's only got about 140,000 tonnes of antimony in its total resource base, and Australia is the 7th largest country with resources. And most of those countries above Australia are not necessarily deemed friends of the West in terms of the supply chain risk. So this is a very important part of this project, and we're dealing with the highest levels of government, not only here in Australia, but with our partners. Metallurgically, it's a simple flow sheet, very similar to Costerfield in this respect. It's not refractory gold. We have free gold. Greater than 80% of the gold is around grain boundaries recoverable. With gravity and bulk flotation, we recover 93 to 98% of the gold. In early stage work, we've only done a few holes to date, so it's a hell of a lot more metallurgical work to do. But certainly the first work demonstrated a potential economic flow sheet out the gate. We get the old timers took about 50% gravity, and they only dealt with the gravity recoverable portion of this deposit. in those 1800s. We got 20 to 30%, so there's a lot more optimization work around the gravity. The flotation was what we focused on here, and we get a very nice gold recovery just with flotation products. So we produced an antimony gold float. That's the key aspect of this, and gravity and antimony gold float. We got to keep the arsenic under 3% in that antimony gold, and we're able to do that. With one of the samples, we did it easily. The other, we had to do a 2-stage float and float off a separate sulfide con. The sulfide con has a lot of gold in it, and importantly, it's free gold also. So that could be leached rather than sent to a smelter, for example. So then there's probably blending opportunities that we've got to go through. So lots of green flags, not any red flags there in the initial work. So non-refractory, key point, and gravity and float will be the answer here. Doing a hell of a lot of work behind the scenes, and you've already spoken with Lisa Gibbons here, who lives on the project. She's very well trained, Newmont, Normandy. She's a geologist, but in also the ESG side of the business. We're doing all the baseline work, which we should do to establish what's there before we have any further impacts in the area. So all the groundwater, the dust, the noise, etc. What we need to do is build resilient stakeholder groups, and that sounds a bit cliched, but if we have the local people, we have the native title Indigenous people, and we have the municipality on side, and they understand what this project is, they understand where it's going, and they become a part of it, we build a resilient community. And when the opposition comes, because they always come to mining projects, we have that local community who understand the project, and they can basically say, no, we want this. And that's the secret to what I've seen over many years when you get a project. So that means you've got to have full transparency, openness, lots and lots of dialogue, and we've got 3 people on the ground already doing that fairly consistently. And it's hard to earn and easily lost. So it's something you've got to continue and work very hard on, without a doubt. The people that we employ are essentially local. We spend about $1 million a month with the 4 rigs, and 70% of that goes back to the local community. Live local and spend local is a big part of the culture, and that is part of demonstrating the opportunity for the project and the people who live around it. We have a board that has supported me over the years. So it's that kind of board that people who've been great mentors and leaders for me. So Tom gave me my first job in exploration back in the 90s. Georgina's been working with me for 15 years. She's World Bank, OECD, Harvard, ex-Australian government, so gives us access at government levels that are unusual. And David really taught me the ropes in the junior business in the late 1990s, early 2000s, and we worked together a lot in Canada. And Lisa, you've heard from, and I've mentioned, is amazingly well trained and a leader of the future for the mining industry, without a doubt. This is the mining industry needs more people like Lisa. The program this year is essentially to drill and drill and drill and make this bigger. It's a fine line between determining the resource base, but demonstrating the vast opportunity. And you'll see us focusing on those 3 aspects: the grade, the volume, and the scale as we build more and more ounces here. But there's certainly no ambition to stop drilling. In fact, we'll be bringing more rigs to site, more than the 4 that we have going at the moment. And the aim is to move to 6. So I think that's essentially where we're at here, Jorn. We've developed something very quickly. It's very rare in terms of its grade. It looks like it's going to be large if it continues to deliver like it has. We've got a lot more confidence now in how this all hangs together. Metallurgically, it looks great. and the antimony byproduct is really quite important. So I think that's a nice place to start having a chat.
First of all, I think we all kind of want to hear. It's kind of poetic in a sense. I mean, you've worked in our backyard here in the Nordics for a long time, and been all around the world doing your trade, right? And as an entrepreneur as well. And now you're back to your home turf with this stellar project. Can you talk about the journey and how it came to be?
Yeah, it's the irony, right? And you think and reflect about what you want to do in life. And I certainly wanted to travel, and I love and I've spent many years, 20 years, and I had rented a house in Marlaw in Vesterbotten for 12 years. So it's been such a big part of my learning. But the irony is that I've come back to where I grew up, like you said. So I grew up in country Victoria. I went to a little school of 7 to 10 kids that overlooked the project. I became involved in geology because I was in the middle of the goldfields, essentially, and my neighbours were three brothers, and their dad used to take us out and metal detect and have pans, and I thought that's a pretty cool thing to do when I got to university, and I did geology as sort of the interest subject outside of maths, physics, and chemistry, and then it stuck, and then race forward, a decade in a major company where Tom, our chairman, was leading the exploration for that major company called Pasminco. I one of the first things I did with my business partner, who went through university with me, and through Pasminco for a decade, is we tried to tell that Fosterville story, but at the time it was a 5-gram refractory deposit, so it didn't seem that appealing to others, and so we sold the projects. We actually had Redcastle and Rue, which are the two other projects. We didn't have Sunday Creek at the time; it was held by somebody else. But then I had a wanderlust to travel, and hence that history. And so I would never have. I discounted my backyard, and I thought it was all a bit too difficult, and the rest of the world looked a much more interesting place. So that I did for 23 or 4 years, and was on a plane every month to Toronto and in that capital markets. And then I saw in about 17, 18, Fosterville was the supersonic deposit like I spoke about, and I was getting on a plane doing that, and all the capital was coming back because I was living in Melbourne. So I thought, let's buy back into some of the projects, and the people that we sold the projects to in the day were good enough to entertain us, and that we did. We bought Sunday Creek outright, and then those two other joint ventures, and here we are. And I'm happy in my mid-50s to be back home, without a doubt. It's very nice to be back with your tribe, and I wasn't like that in my mid-30s. So it's about the right time personally for me, I think. And the other key point is that we got these projects just a week or so before COVID hit. So it was an inspired move to be able to do something during those lockdown years. Unlike Sweden, Australia was doing it very differently, and but exploration and mining were kept open as a business.
Yeah, and I guess we always like to ask this of the key people running the company. How much of your, say, personal net wealth would you say is allocated with shareholders in shares? I mean, options are fine too, but ideally as shares as it is right now.
Yeah, well, I just wrote a couple of $100,000 check to Mawson this week. Mawson owns 51%, and I've got to spend another $800,000, I think, to get more options that are coming due in Mawson, and then the options that are in Southern Cross. So I'm committing without a doubt. We spun this out of a major, out of Mawson, so there was no cheap stock in this deal, or founders stock. So I've got something like 1.5 million shares, I think, that I bought. And then through Mawson, I've got something like 3 or 3.5 million shares. So there's another million shares there. So about 2.5 million shares. But I'll end up with about 5 million shares when that whole exercise takes place, and so which has already started. So there'll be 5 million bits of paper in my hand of Southern Cross, which is a significant part of putting my putting my stake in the ground with shareholders.
Perfect. And then on that note, I mean, with Mawson, you covered it quite well in the presentation. To clarify, like post the transaction, actually, first, when is it going to be all closed, and when has when will these shares be released from escrow and converted to from the Mawson structure directly to the existing shareholders? And what will the sort of tight portion of your shareholder registry look like, you expect at that point, after that conversion?
Yeah, so May 16 is the end of the escrow. That's an ASX escrow. Mawson was treated as a vendor, very, very locked down escrow. So that then when May 16 happens, we'll start the plan of arrangement and shareholder vote. That will take a couple of months, 45 days notice for a shareholder vote, etc. So it's probably middle of the year that there'll be a record date and then a distribution, and more or less, 1 to 3. If you look at it, Mawson's got 200 and close to 300 million shares out, and they own 93 million shares of Southern Cross. So more or less 1 for 3. And there was a second part of that question, the tightness, wasn't it? Well, we've worked very hard, and there's been the major shareholders of Southern Cross now own about 70%. Everyone's bought Mawson for Southern Cross over the last year. We're going through a whole structural unlocking of that value. So the last thing we ever wanted to do, we've got a 1 million ounce deposit we found up in Finland in Mawson, and we've just sold that to shareholders essentially into a new vehicle because we didn't want to raise money in Mawson, spend it in Finland, and dilute shareholders out of Southern Cross. That didn't seem like a good idea. I think there's 70% plus that I can write on a bit of paper for you and give you the exact names, and then there's 30% that's less known. But let's say 15% of those are people who go, well, what am I going to do with this bit of Australian paper? So if it's 15% of Mawson, then it's 7.5% of Southern Cross. Excuse me. So that's maybe now $15 million. So we've got to find $15 million of buying, which I know we have today. If anyone wants to sell a block of Southern Cross, we'll sell it tomorrow because there's huge demand to try and get position in some liquid stock. Essentially, we trade about $300,000 of stock a day. So that's, we put a lot of work into making sure that it's a successful distribution, not a distribution into weak hands. The other thing to talk about is that we are considering a dual listing, which is the absolute counter move in Canada, but we will be more than 50% owned. Fosterville was a Canadian story. The Australians never saw that benefit. We have some of the biggest names in Canada, including Pierre Lassonde, as shareholders. And I've had that 25 years there, and I've got a very well trusted group of people who I work with. So if a dual listing, you talk about spin outs and dual listings, generally the counter the side is don't distribute and don't keep a single listing is probably what people generally think. But there's some very good reasons for both to happen in this case. Now that's a consideration. It hasn't been a board decision yet from Southern Cross's point of view, but absolutely we're talking about it and getting feedback as we speak. But that would it's just simply got to bring more buying than selling with the North American focus, and we think it probably will.
So, I mean, what would be a hypothetical timeline for a dual listing? Say if you were to have a board meeting and decide, how quick could that move, and what's your feeling about it? It's not set in stone, but what's your feeling about it?
So it has to happen before the distribution because that's a key part of it. Yep. What's my feeling? It's a really good question, Yorm. You should be a journalist maybe rather than studying stocks, because that's the psychology, I think it will be an absolute pain in the rear, without a doubt, from a compliance point of view. But I think it will be worth the effort because I've just come back from 2 weeks in North America and Europe, and there's a huge amount of appetite for high grade Victorian gold, and I know a lot of people just don't want to trade across in Australia when, put an order in and wake up and see what happened. So I think on balance, my the yin and the yang fall with, if it's going to bring more buying, then the pain is worth it. The Spanish say vale la pena, so it's worth the pain. There must be a good Swedish saying around that too.
Here we are looking at a section looking to the east, and I wanted to just talk through the general geology and how it's formed. So if we think of the system as an empty bucket and we fill it with sand, that's our turbidite sediments that surround the Sunday Creek area. And then if we insert a plate into that subvertically, and that's to represent our dike. Now, if we squeeze the bucket so much so that it's getting compressed, what's going to break but the dike? And that's because it's a rheologically competent and strong body compared to the surrounding sediments, which just move and fold. And so the dike and the surrounding altered sediment, which has been strengthened by sericite carbonate, is the thing that breaks and focuses the mineralization. So this is why at Sunday Creek, the majority of our high-grade results and mineralization in general is locused around this dike structure. This doesn't mean that the mineralization is solely within the dike and the altered sediment. We do see mineralization outside of that. We get a disseminated pyrite and arsenopyrite body that can extend for 150 to 200, but quite often can be down around the 50 meters. Often we also see a bias in the hanging wall as the fluids are migrating up. They tend to go up and out on the hanging wall compared to it's hard to push a fluid down on the footwall side. In terms of the mineralization orientation, I just changed my view to look in plan. So we've got our east-west trending dike, the thing that locuses all of our mineralization, and this is the thing that fractures. But then the orientation of the fractures are not parallel to the dike. The orientation of them is a north-northwesterly orientation, and this is because our compression direction is this orientation. So we're squeezing it and we're pulling it apart in that orientation that causes all of these fractures. The way we model these structures and know that this is the orientation compared to running parallel with this is we have all of our drill core at Sunday Creek is orientated drill core. It's all diamond, so we can physically see what the core looks like. And the way we model these is three components. We look for geological likeness, so we're looking for either an intensity of vein extensional veining as our vein set, and then usually we have what's called a high-grade core where we might have a larger amount of stibnite, antimony-bearing stibnite, and gold as well as quartz carbonate veining. So here we've got an example from hole 82 of what we call our vein sets and our high-grade core. So the red dashed outline is what we would call our high-grade core. This is an individual shear vein dominated by stibnite, which is the silver, and then you've got quartz and quartz carbonate and some visible gold. So these are typically plus 50 to 100 gram plus gold and plus 30 to 40% antimony. And then we've got what we call our vein set, which is here you can see the increased frequency of veining. This is all hosted in dike through here. And this is associated with an increased grade of gold as well as disseminated pyrite and arsenopyrite. So even through here you can see individual veins do have some antimony, but typically it's dominantly within the high-grade shear vein. And then within this, so we've got our vein set orientation, and then we can model our high-grade cores within this. This then leads to our second feature, which is our structural orientation. So we can use orientated drill core to pick these up. And then thirdly, we've got our CV. Now, CV is a coefficient of variation. It's a geostatistical method of analysing our interpretation. Basically, by grouping all of the assays within one of these vein shapes, we can look at their variance and continuity by looking at a CV. Typically, if a CV is under 2, you're doing pretty well and showing good continuity. On average, for the Apollo area, which we have a reasonable amount of drilling into now, we've got a CV averaging about 1.5. We haven't completed it yet for Rising Sun because we haven't started pulling all of those high-grade cores out. And when you start adding plus 4,000 or 1,000 gram results, it can really increase your variance. So by us subdomaining and pulling these high-grade cores out, we can improve our continuity of our model, and we can also maintain some of those higher grades. Here's a table of the CV. So as I was talking to Apollo, where we have probably sufficient drill density, and we're talking to the coefficients of variation, and typically these are the values we kind of say helps indicate whether they're continuous or not. You can see the majority of these are all below the 2, or we're averaging, say, around the 1.5. Some of them do have higher range CVs, and you can see that when we look at our maximum assays, how we've got some high grade material in here. That's telling us straight away that we can probably subdomain out some high grade cores in here and improve our continuity per estimate. If we have a high CV, this typically indicates we need to top cut to improve it, and so we can either top cut our result or subdomain and remove those and put them into a different shape and improve that. And so you can see where we high grade domained and subdomained some of these features, we have quite good continuity in the high grade ranges. And now next, what I was going to do was step through a couple of individual veins to show where we've been drilling recently. So if we start with Rising Sun 10, okay, so here we are looking at Rising Sun 10, one of our longest defined veins to date. So this is to show from surface topography, which is the grey line here. The green is our dike, the beige is our altered sediment, and the red is our currently defined shape. Now this is only bound by some drill holes in areas restricting it, but as you can see, as we come down into depth, it's relatively unbound by drilling. But to date, we've got results as far down as here, and you can see in terms of the vertical continuity of this individual vein set, we're up to over 500 meters. So you can start to see how large these volumes can be. On average, our strike is around the 30 to 40 meters of this particular vein. It's actually one of the slimmer vein sets that we have in the system, as the majority of ours are around the average of about 40 meters. And this is a component of how much altered sediment and dike we have in the area. The next image I want to show you is Rising Sun 50, and of that we'll also then jump and have a quick look at some of the structural orientation as an example of what I was talking about before with continuity. So here we have Rising Sun 50, once again all the same images shown up of the dike breccia and the altered sediment. The main one I wanted to show here is that this hole, whilst it doesn't have as many bounding features, you can see that we have been drilling holes along strike from each other rather than just stepping down into the dike system. Here we can see we've got over 60 meters of strike extent, and we've got around 550 meters of vertical height. And this is a vein that's actually starting below surface. A lot of the Rising Sun area is actually blind to surface, as there's a fault that comes through the area and hides it at surface, known as the Golden Orb fault, which I'll show later in some of the plan and 3D sections. So a lot of the drill focus has been around this dike body in particular, but we have been seeing in this altered sediment, we're getting quite strong mineralization to the same level and tenor. So we're now starting to expand our footprint and push out the structures and get more strike extent. The final image I'll show is an example of that, which is Rising Sun 80. Here we have Rising Sun 80, once again a similar orientation. We've got the green is our dike and the beige is our altered sediment. Here, however, you can see that we do have some further drilling that we've actually spaced some of these further out, and we've got up to 100 meters in some areas. In this case, it's 80 along strike, but if I take the entire vein as an entity, you can see we've got around the 100 meters of lateral continuity. Typically, though, this feature is averaging around the 40 to 50 meters of strike. But you can see here I've got some composited grade material on. You can see the gold grade is plus 10 gram and some plus 20 gram material. These holes, we're all waiting on assays, they're upcoming holes. I can't talk too much more about them, as we don't have the results yet. But here you can see the strike of this feature is up to 200 meters, and we're sitting quite below the surface when I'm looking in a full section view. So these veins are all stepping down in sequence with each other. So I mentioned earlier the Golden Orb fault zone, and that's a feature that hides a lot of the rising sun mineralization to the surface. So here we can see that at surface, we've only really got one vein expressed at surface, and that's because as we look down in view, we can see that this structure is actually hiding the majority of our mineralization at surface. And this is why historically this area was never mined dominantly. There was a small amount of historic workings at surface, but the majority of the workings were over in the Golden Dyke area and in the Apollo area. So this gives a lot of opportunity for us to start looking for blind mineralization that's not present at surface, and so we're starting to explore that. As part of this system, so currently to date, we've defined about 42 vein sets in the system. And if I just bring that up on screen, so we've been working on these areas dominantly, and we've just released an exploration target that goes down to about our deepest known mineralization to date, which is in hole 82. This is where it exits the dike system. This is the point that hole 82 actually exits the dike structure, and so it's our last known mineralization in the dike and altered sediment. So we've created a exploration target that includes the Rising Sun area here and the Apollo area, including the Apollo Deeps area. Now this is only about a third of our drill package, the focus of the Sunday Creek area, and doesn't include any of our regional targets or exploration currently. But to date, that's about a 1 to 1.6 million ounces at an average grade of around 7.2 to 9.7 grams a tonne gold equivalent. So we're pretty excited about converting that into a resource over the next 12 months or so. And we think that'll probably take around the 40 kilometres of drilling, and we'll probably also incorporate a bit of additional exploration outside of that to make sure we're continually growing. We've got the exploration target, and so here's talking to the areas and some of the results that we don't have currently within our exploration target. So this is the exploration target for Rising Sun. This is for Apollo and Apollo Deeps. And you can see we've got some significant results sitting outside of this area. So as we step to the west, we'll be able to expand that footprint. This doesn't define the bottom of the system. I'd just like to point that out. That's just where we have our last hit in mineralization. We're pretty confident that as an orogenic system, these things usually tend to be up to 2.5 kilometers vertically. And whilst we may have lost a small component at the surface, because we see the system transition from a brittle to a semi-brittle to a ductile, we're only just starting to enter this ductile section. And when I say we're entering a ductile section, that means we're going from dominantly extension veins at the surface, and we're starting to get more shear veins as we go deeper and deeper. As part of this, we also see geochemically, we can look at our arsenic to antimony ratios, and we see those changed with depth. Stibnite is typically a pressure and temperature controlled feature in orogenic deposits. It forms in sub 250 degree environments. So as we go deeper, we expect to get less stibnite as the temperature increases, and we'll get more ductile environments and hotter features. And that's caused by basically we're going from diffuse extension veins at surface, and as we progress deeper and we heat up, we focus the fracturing into shear veins, and we focus our intensity of mineralization. And if we go by the Fosterville or the Costerfield models in the nearby areas of Victoria, what you'll see then is an increase in our gold tenor and maybe a reduction in our antimony tenor. So yeah, we're hoping to put some more drill holes in and find that out.
So this exploration target, in terms of width, that's about, is it 400-600 meters in terms of length or strike? This
yes.
window.
So in terms of the window that we're looking at about a 600 maximum window in terms of full width. But in terms of the height, it's say 600 meters in Apollo, and it's down to a kilometer depth approximately in Rising Sun, or 1,023 meters exactly to be precise. So I guess you could say Rising Sun has a window of say 350 meters by 1,000 meters, and Apollo has a window of say 300 meters by 700 meters or so, 630.
And so far, antimony looks to be like 20% of the in situ value or something like this. So
Yeah,
when you
it
say
varies.
1 million to 1.6 million ounces equivalent, that would be from 800,000 to 1.3 million ounces of gold in this window, something like that.
Yes, that would be correct. Yeah, so the antimony represents about 18 to 22% of our value currently. It does fluctuate. We do seem to have higher tenor in Rising Sun comparative to Apollo. So as a split, Rising Sun has more of the ounces that we're discovering. And as part of this exploration target, the way we did the lower range calculation and the higher range calculation, we actually applied pretty stringent top cuts to our gold results. So we top cut for the lower end, we top cut to 24 grams a tonne over a metre. And for the upper end, we top cut to 67 grams a tonne over a metre. Now, in Apollo, where we had high grade domains subdomained, we didn't top cut those, so we could maintain some of the higher tenor. But in Rising Sun, where we don't have the drill density yet to be able to define these high grade cores and pull them out, they got top cut. So in my mind, I'm going to see that we'll actually probably end up with some higher tenor values coming out of Rising Sun as we start to subdomain those grades, because we've got our best result yet in Rising Sun is the 4,190 grams a tonne in hole 82, and obviously that gets top cut down to 67 grams over a metre. So you can see the grade difference.
One thing I guess I want to ask is about the antimony itself. I mean, how is that dispersed? So does the antimony disperse as well as the gold does when you step out from the veins, or is it more gold when you go into the kind of the sand in the bucket, I guess?
Yep. So typically what we see is the high grade core is the ultra high antimony. That's where you're getting like a 20 to 30% kind of assay within that interval, say over a metre shear vein, we're getting the 30%. And then as you go out into your extension veins, you are dropping in your amount of antimony, but that's probably a volume component. So each of the individual extension veins we see often have stibnite within them, but we're also picking up the grade in the disseminated arsenopyrite and pyrite. So yes, the tenor does decrease out into the vein sets, but it's still very well mineralized. And as you progress laterally along strike, as you enter into the ASED and then into the unaltered sediment in particular, what we end up seeing is usually a focus from the vein sets into just your high grade core, and you continue on. So less of the disseminated mineralization out there.
I guess my question kind of is the gold antimony split more? Does it favor antimony more in the very high grade areas of the veins?
Yeah. So because stibnite is pressure temperature related, and typically what we see, especially in Victoria, there's a really high correlation in the Melbourne zone, which is where we're hosted of stibnite and gold. And that's because as you drop stibnite out, so if we crack open a vein and you, by doing that, you will reduce the pressure, which reduces the temperature. So you'll start dropping stibnite out. It actually drags the gold with it. So what you'll usually see is where you've got high stibnite or antimony grades, you will have high gold grades. So we don't often see just gold by itself unless we're starting to get into those more shear vein textures where we're getting ductile movement, and we're probably in hotter temperatures where we're not dropping out the stibnite. So yes and no, they are linked, but not always, and that's a pressure temperature dependent factor.
But generally, you would expect this ratio to maintain. I mean, so kind of the idea that I had is that when you start really defining these mega high grade areas, that the antimony might be overrepresented or can actually increase as you infill this thing out more, or do you maybe you don't see that really happening?
No, it's quite interesting. Regardless of what cut you use, like if you use a 0.3 gram a tonne or a 0.5 or a 1 or a 5 gram, weirdly the ratio of antimony to gold actually stays around that 20%. So okay. I'm not expecting that, although when we go to depth, I think it will change. So once we start drilling deeper down here and we start getting into that ductile environment, we might find that the gold is far, far outweighing the antimony percentage. That's what we would expect if we went the Costerfield or Fosterville models. But currently, we're not seeing that.
If you use those analogies, I mean, these two, nearby deposits that are big, right? How does the grade? I mean, how does the deposit change when you go to depth? It becomes more gold rich. Does it become significantly richer generally at depth, or what would you expect here?
Yeah, so typically because you're focusing your system in, so you're going from a more dispersed to a focused system, what usually you'll do is your cumulative gold will be focused into a smaller volume. So in terms of your mineability, you mine less tons of material and you'll get the same amount of gold. So yes, the grade should increase and focus into an area. The interesting one is because neither Fosterville nor Costerfield are dominantly hosted within dike material, it'll be interesting to see if that focus we see as much here, or whether what we're going to see is just more high-grade veins at depth. It might actually be, rather than having a focus of them, we're just getting an increase in veining with depth, and the mineralization style changes. As in, we might see with depth that we get more quartz shear veins with less stibnite, and there's more visible gold, compared to just only focusing into, say, one vein with lots of visible gold. I don't exactly have an answer for you, sadly, but there's a couple of hypotheses that we're working on.
Yeah, I mean, it's the game of exploration, right? But at this point, with your exploration target, it's you have more strike to work with, kind of low-hanging fruit before you start digging deeper.
Yeah.
I guess that's the...
Yeah, exactly.
idea.
Like, this is just the rising sun area that we've defined, and we're pretty confident that these veins will extend. But what I'm quite excited about is when you look at all the assay results sitting out over here and the results that we haven't included in the exploration target. And this is probably when I've got an image that you can show for the exploration target. But we've got a lot of plus 20 gram results sitting out in these areas and over here that we haven't even stepped into. We've got the historic Christina mine and its workings, and then we've even got the regional targets. So with plus 10 kilometres of dike on this dike trend. So in terms of this feature, how we've got this east-west trending dike, we've seen parallel structures to the south, and there's historic workings in the north that also are said to be hosted in dike. So we've got the potential that we've got multiple repetitions. So I can see this growing to quite big. It's all about actually focusing and going to drill some of these targets. But when you're drilling 300 meters at 6 grams, it's kind of hard to pull away from that and go drill something else. But we will start to plan it. But ideally, I want to make sure that when we're targeting these things, that we're making sure we've got a geochemistry anomaly, a geophysical anomaly, and mapping to back us up. We're not just going to go drill off one thing and waste meters potentially. We want to reduce the footprint that we're going to be exploring on as much as possible so we can have the highest chance for success. Otherwise, it would take years and years to pattern drill this thing before you found the mineralization, when we can be smarter and do some applied geology to find it.
Yeah, so could you go back to the kind of the long section or the windows we can see?
Yeah.
So to the west, I mean, approximately, it looks like you have like 400 meters of defining further strike lengths. I don't know if it's to the west. It should be to the west, right? To the left.
Yeah, so this is to
this
the
view.
west. So this is just the model bounds. The dike does continue off on this area. This is just what we've constrained it to currently. But yeah, if you went across to the historic Christina workings, which sit about here, we've got about 670 meters of strike along the dike that we have nearly no information on. And then even further to the east, so there's historic records of the dike being continuous. We can map it at surface. If I actually just bring up a GIS line for you. So
and I guess if we remind the viewers briefly, I mean, why you have selected this specific part of the strike, that the big strike, is because you have the very high soil anomalies, right, in this area.
Yeah, so we've got some really high soil anomalies in this area, and we've got the historic, these were the largest historic workings that were mined at the time. But now, once we've started understanding rising sun and seeing these larger areas of hidden mineralization per se, workings don't always point you towards the best samples. So if I just bring up the soils as an example. And the black line running through here is basically a projection of our dike and where we found it at surface. And I can zoom out and show some more. Yes, so in terms of the soil anomalies, we had a really broad soil anomaly, originally in gold, and this is the reprocessed arsenic, gold, antimony, and manganese help us point towards these targets. So we can see a really broad halo around here. I've just removed any samples that were directly on mineralization and potentially had some historic workings affecting it. So we can see regionally we've got some beautiful bullseye targets sitting along strike. I've got all our drilling up, so we have no drilling in this area. We've got the historic Leviathan, Tonstall, and Consols area. If we continue along, this is the dry trend that we see. So we have done some initial drilling in these areas and got some quite significant results that we need to follow up on. So we've got some really nice soil anomalies. We also get, if I zoom in on the Apollo area, so right at the start of the campaign, we actually did some offset IP, and that allowed us to see the pyrite halo, as well as where the sericites measure weather to clays and illites. We actually see that really well. So here, if we're looking at, these are all our current Apollo domains, and you can see it all fits perfectly within this nice IP shell when we're looking down it. So this is where this kind of exploration strategy can be quite powerful for us to be able to find these things. So we can use a combination of geophysics, geochemistry, and structure all to find that footprint and target it. Yeah. What else did I have left to go through?
Yeah, so the exploration target is quite clear, but when we looked at the soils, they stepped out quite nice. It looked like it was to the east, right? The soils really flashed out.
Yeah,
but
so
to the west, you didn't have anything, right? Or have you done soils further to the west?
Yeah, we haven't actually done soils further to the west, so we do have some work to do on following that up. So in terms of there's Rising Sun, and we do have Golden Dyke, and actually I'll bring up. Yeah, so we do have Golden Dyke and Christina that we've got areas, and we just haven't done the soils yet on that area. The focus was on the Apollo and Rising Sun. So there is some plans to do further soil works throughout the region, as well as up including through this area of the dike that we might have not necessarily highlighted yet. So yeah, there's a lot more work that we still need to do, and we're making sure that we're progressing this all kind of together, so we're not necessarily drilling out everything and then stopping and going, what next? We're always generating our targets and thinking these things through, because we don't want to rush into them and make a costly mistake. So we're trying to be quite adaptable and flexible to our drilling plans.
Could you rotate, if you maintain the soils and just rotate down to the long section again, so we can see the drill holes that has been done and how they map?
Yeah, just.
So we can see to the east you have these flashing soil anomalies out on the surface. So it seems like that should be, it's quite obvious you can step out there, right? And it looks like you have. It looks like you have like a duplication of the exploration target just to the east.
Yeah,
hopefully.
In terms of scalability, this is quite a large target that we're looking at. So we're basically looking at a 400 meter kind of wide, which is the equivalent width of Rising Sun or Apollo in terms of the length of the dike that we potentially need to test. So there's quite a large footprint sitting out there. Yeah, quite big, and we have some equivalent ones regionally as well. So like some of these you can see are getting quite large in terms of where the scale of these things. When we're looking at a 600 meter soil anomaly trend, it's quite exciting in terms of the scale and the things we might find. And then in my mind, I'm also considering things that we might have up in this area. This is a dike that we've potentially picked up down in the south. So we've got a lot of more area to follow up on and some additional soil infill and everything to kind of understand.
So, that kind of shows it quite well. And you have drilled to the west, right? You've hit in almost all of those holes to the west. That is not included in the exploration target.
Yeah, so if I bring up, actually, that's great. So yeah, these are all plus 1 gram results, but if you even want to see plus 5 gram results outside of this area, you'll start to get an idea of So yeah, we've got some plus 20 gram results sitting out through here, and these holes were all drilled north to south, so they're only intersecting a small part of the window of the dike. So we do have some follow-up plans to start drilling out this area of the dike, as well as even stepping across to Christina and understanding what's going on in here. Because if I just give an example of some of the historic data that we have on Christina, it was only 2 levels mined, but from it we actually got some great mapping levels. So here's one of the great ways that we also understand the orientation of our antinomy veinlets are trending this orientation, and that we've actually got a 15 to 20 metre wide dike zone through here, and we're expecting then the surrounding altered sediment to be around this kind of length, which is what they mine. So there's a 50 to 60 metre target area, and then to start drilling beneath this. Now they only originally mined 150 foot, or approximately 50 metres down, and then I think there was a 230 foot level, which is approximately, say, 90 metres vertically down. So they didn't really mine much at depth, so we're looking to explore that. And there's only been some early, in the 80s and 90s, previous companies did a couple of RC holes sitting above. We typically don't do RC on the project. We like to do diamond because we understand that the structural controls are so crucial to making sure you can follow and track these veins. If we were just following it by assays alone, we wouldn't be able to understand this deposit. But because we've got the visual core in our hands, we can really get some controls on it, and it makes it a lot easier to explore for and be predictable.
Yeah, and we can see that in your success rate, right? Hitting almost every time. So that's obvious. One thing that I wanted to kind of to clarify then. So towards the west, I mean, beyond west of the Christina workings, what's the limiting factor here? When does it potentially? What's the cutoff for you guys to the west?
That's actually a great question, because we haven't really explored that much further to the west. In terms of regionally speaking, the dike does continue. It'll probably be this bound all the way over here. This is somewhat of a domain change as we enter into more northwesterly trending features, but that's sitting, say, that's 2.2 k's west of Christina, so nearly 3 kilometres west of the Golden Dyke and Rising Sun area. So we've got about that much room to play with before we think that the dike might enter this zone, and the orientation might change. And we don't really have too much information on what happens out there. Now, as you move to the east, what we do see is that this dike does continue through into what's known as the Reedy Creek domain, and that's where everything's still on that northwesterly trend, but we see a lot more thrust faults. And so the style of mineralization will probably change. But that is also some further follow-up to see what happens in there. So we've got plenty to deal with, and as you can see, if I took it from this end all the way to where we think the dike is, we've got over 14 kilometres technically, but we need to define and make sure the dike continues through these areas. And with these smaller offsets, it's just keeping track of where it goes. So we're doing some regional mapping at the moment to make sure we keep an eye on this and can keep expanding these targets.
So to kind of get more, I mean, obviously you stepped out to the west without having the soils. I mean, you're hitting mineralization.
Yep.
Do you want to do soils and do some kind of, I don't know if you have geophysics there as well to the west to kind of really shore that up, or do you think, I mean, you have too much already to kind of target either way, so it might not be necessary. But demonstrating scale, even further.
Yeah, we won't necessarily do the soils around this area because it's something we're immediately already drilling, so there's not necessarily a huge value at. But where we start stepping out further, where the uncertainty on the exact position of the dike, that's where it can add some value. Because we fanned these holes from the known to the unknown. Basically, we put this hole in, confirmed where the dike was, and adjusted the next hole plan. So by doing it progressively, stepping out from the known to the unknown is how we reduce our risk, and we can drill these things without necessarily a geophysical or a geochemical target. But when we want to start stepping out, say, 1 kilometre or more, that's when we probably want some more information to help guide us, rather than just drilling very long holes through the area and having a lot of potentially barren material. So there's a lot of planning that we need to make sure we do to optimise and not waste money.
So I think people get the sense of the potential on the strike. Can we just summarize? If you go down to the long section again and pull up the exploration target.
Yep.
And that's 600-700 meters in strike, 800 meters deep. That's the target. How many, to get that to say a kind of inferred, partial, indicated confidence level, how many meters would you say would be required? Ballpark.
Ballpark, say 40 Ks, 30 to 40. It depends how many wedges we do. We can save a lot of meters if we start doing wedges and optimizing the drilling, and that's what we're looking at doing. So around the 30 to 40 kilometers to get that that converted. And I'd say the next target will probably drill out in a much more efficient manner again on top of that. So we'll start building the next exploration target as we're converting this is the plan. It's always showing that growth and the scale of this thing. We're not going to just drill this out and not keep demonstrating the volume and potential of the Sunday Creek field.
So to kind of explain the economics of it, and it will improve as you kind of honed your technique here and understood it better. But total drilling, I mean, I include everything, all the drilling that's been done for this 600 strike by 800 meters deep window. What would it be? So people can kind of extrapolate and see the economics of the return of the drilling.
I don't have it for the exact for this window alone, but total window that you can see on screen currently is about 40 kilometers drilling total currently. So say that would be 80 kilometers total, including all of this area and this area. So I don't have
that
an
also
exact
includes,
number.
That also includes stepping out to the west a bit. So let's cut that by
Yes.
10. So 70, 60, let's say something like that.
About that.
It's fine.
Yeah.
So right. So you have 60, 70 kms to define like 1 million to 1.5 million ounces of gold, somewhere around there. And we can see quite clearly. I mean, just both to the west and to the east in this little local, block that you guys have defined. Let's say you can for sure. I mean, never say for sure, but if people think that it's consistent, you have you can double it or potentially triple it within this window. And then
we can see it going that way. Yeah, and the main thing for me is that I think that we can increase the grade potentially as well. As long as we can keep maintaining and seeing these high grade cores, then that improves our gold grade overall. And if we subdomain those, then we can see that higher tenor represented in our gold grade coming through.
And so in the exploration target, you feel that has been conservative in that regard.
We've top cut to 24 grams and 67 grams for our high range estimate there, which is what we've done because we don't have sufficient data in this area. So that is a relatively conservative approach. But I think over time, with more drilling and more understanding, we will see that grade increases and it reflects the geology that we're observing. But we won't know until we drill more.
Yeah, and that would have to be a targeted program for those specific areas to kind of really understand those small blocks.
How we're now targeting this drilling is we are targeting those high-grade cores as part of this and making sure we're getting them because they typically extend for the full strike length of these vein sets. It's just making sure we can define them. It's all part of the general drilling that we're doing. It's just making sure we understand them and recognize them in the core. So it's that geological likeness and the structural orientation that makes sure we can link them. And because if we're currently, this is 200 meters below our previous result, it becomes very difficult to project a single 1 meter vein 200 meters, but we can project it 50 meters. So if we have a 50 meters spacing, say, we can start to link these things together with a much higher confidence.
And then I think it's useful because of course you have direct experience with both Fosterville and Costerfield local in this area. Can you kind of remind everyone what those deposits looks like and maybe indicate how much they are valued in the market approximately and what they've been able to do so people can get a sense of what the potential is here, right? The relative kind of valuation.
Now, I'm not sure entirely on valuations, but I can speak to when Fosterville, so I'll start there, when it started mining the high-grade Swan Zone at depth, they were making nearly $1 billion free cash flow a year. So that was quite a significant portion. They were both Costerfield and Fosterville are in the top 10, say, highest grade mines in the world, their respective peaks. So they are different in terms of they're all the same mineralizing fluid and mineralization timing, and the same as Sunday Creek. So Sunday Creek, Fosterville, and Costerfield are all the same timing and mineralizing fluid. The difference is their structural setting and traps. So the Fosterville deposit is hosted in the Bendigo zone. So it's got chevron folds with carbonaceous sediments that are causing slip, and it forms in a thrust environment. So a lot flatter orientation veins. They're like a 50 to 60 degree dip, and it forms a single shear vein of, say, 3 to 5 meters with an alteration selvage around it of 5 to 8 meters of disseminated pyrite and arsenopyrite. So we're talking all the same mineralogy currently. The difference is that their gold in the arsenopyrite is refractory, and so it's locked up within the crystal lattice, so they require biox to get it out of the sulfide. They can use gravity to recover the free milling gold that they see in the shear vein. Whilst at Sunday Creek, it's non-refractory, and grinding, or the initial network suggests grinding will pull it out in a gravity recovery. So there's some differences. And then Costerfield is single antimony-rich veins. So they're 20 on average a 20 centimeter vein is what they mine at around 2 meter mining width. They'll mine a 20 centimeter vein, but it's always usually plus 100 gram material and say plus 30 gram in the vein. So they end up with an average head grade of say 10 grams gold equivalent. They don't really have the alteration selvage. They do get say 5 centimeters on either side of their individual stibnite vein of arsenopyrite and pyrite, but it's not really auriferous or economic levels. And they'll have that vein travel for say 5 to 600 meters along strike, and say vertically 5 to 600 meters. They're hosted in just turbidites. There's no dikes present there. So the analogy I like to give is basically because we've got this rheology contrast at Sunday Creek, we're getting a Costerfield vein, but every 20 meters or so, but we don't have their strike length. So there's the differences, and we get the disseminated material similar to Fosterville, but we're not forming in a thrust environment. So you can see how all these different things, they're very similar to each other, but not directly comparable. But they have that high-grade tenor, they have the antimony presence, they have the same timing and the same fluid signature. And we see at all of these deposits, as we go from the shallower levels, we go from a brittle environment to a more ductile or semi-brittle environment. So we start seeing more shear veins and stylitic veins, and we see that the antimony drops out with depth. We see that at Costerfield in their deeper shepherd zone. We see that at Fosterville in their swan zone. As you step from the top of the swan, or what was originally known as the eagle, it had a lot more antimony, which they didn't recover. And then as you go deeper, it just transitions to a more sulfur salt dominated quartz vein with visible gold.
So to summarize, I guess you're superior to Costerfield in terms of mineability, probably. It would be fair to say the morphology is more attractive for mining. It sounds like, at least to my understanding. And Fosterville, you have superior metallurgy, probably.
Yeah.
Right.
Yes, that's
fair
loosely what we're seeing. Yeah. We don't have to run an expensive biox plant and use bugs to break apart our sulfide. We can get away with gravity and a flotation to recover our antimony. So yeah, it's almost like the best of both worlds. In that regard.
The only question would be, I mean, so far, and maybe I don't know if you have memory that stretches back to or knowledge about what the kind of exploration discovery phase looked like for those two deposits, but how is Sunday Creek kind of comparing to them in that stage? Because obviously the veterans at these companies, they know, and they are paying attention to Sunday Creek, so they must be seeing these things and taking it quite seriously. But for investors to understand, could we try to convey that?
Yeah, so in terms of speed, Sunday Creek is above everybody by far. So Fosterville started out as a low-grade sulfide deposit, and it took them nearly 10 to 15 years to find the Swan zone at depth, and they weren't drilling big, deep holes. So the Victorian setting really didn't drill more than 300-400 meter holes before the discovery of the Swan. With the discovery of the Swan, people started drilling deeper holes. Costerfield as a whole is around 2 million ounces as a field itself, and they were only ever a couple of years ahead in terms of their mine life. So it's not like their maiden resource was 1 million ounces plus. It was a couple of 100,000 ounces. That's typically the way Victoria starts. But you look at how these things have grown. Like Fosterville is now probably a 8 to 9 million ounce field. It grows over time. But what we're doing is growing it at the start to really show that value and how you could optimize the mining. In terms of exploring at Costerfield, even when I was there personally exploring, we were targeting a single vein. So you would drill a 400 meter hole for one 20 centimeter intercept. Whilst here we can drill a single hole and get 14 or 15 of those within a single drill hole. So our conversion rate of hit to meters drilled is a lot lower. Even though we're drilling a 1,000 meter hole, if we drill 1,000 meters and get 14 hits, it's like drilling 1,400 meter holes. You can find it a lot quicker, or we get more bang for buck, I guess, in terms of drilling. So that's probably the biggest difference, especially even compared to Fosterville. You drill one hole and you might get, say, 2 or 3 targets maximum. And they're always chasing their high-grade core, not necessarily the sulfide. Yeah.
Do you know how much gold has been mined in Fosterville and Costerfield so far, approximately?
Well, I know it'd probably be around the 6 million ounces probably for Fosterville, and probably 1.4 to 1.5 gold equivalent for Costerfield. So they're quite significant. They've been operating for more than 10 years each, so they're quite long-lived mines. Yeah. But the difference is probably that Fosterville does say, well, last year or a couple of years ago, they did 600,000 ounces in a year production, and previous years before the discovery of Swan, they were doing 100,000 ounces a year, while Costerfield has always been around the 40 to 60 to 70,000 ounces gold equivalent. But they're still one of the world's most significant antimony producers as well. Like they might only produce 2,000 to 5,000 tons of antimony, but that's probably getting up in the percentage range of antimony production for the world. So they're quite a significant value for that critical metal.
It must be fun working with this good geology, right?
Oh no, it really is, and like it's probably one of the most exciting projects that I've worked on, especially not just in Victoria, but the fact that we're probably going to end up with a maiden resource plus 1 million ounces is nearly unheard of for Victoria, let alone worldwide. This thing is trucking along. Like it's been 18 months or so since we've listed, and yeah, we've drilled 40 Ks and just had so many cracking hits. Like I think last year we were, I don't know, like there was probably 4 or 5 of the top hits of the year probably come out of Sunday Creek, so it's a pretty significant one.
Yeah, so I think before we get into kind of the discussion on Sunday Creek, if we can just preface that by defining some basic parameters to remind everyone, what kind of drill cost have you guys seen now? You started to get very effective in terms of, we know that you find gold very cheaply because you can drill, you have a great system and you drill very effectively, but what's the absolute meter cost for your drilling right now?
The absolute meter cost for last year, and I've done it, was 200 Aussie dollars a meter, all in drill costs from the contractor plus assays, less GST because we recover that, so the value added tax. So 200 Aussie, which is very, very low. It's a first it's a lower quartile drill cost, and we're doing that because. We're doing that because we've got a very good drill contractor, basically, who's kept a very small outfit. He doesn't want to grow beyond a certain size. He's a geologist, and he's out there on the rigs himself. He doesn't look like a geologist because he's got black hands, unlike these softy hands. And he's a shareholder too. He wrote a big check early days, so his success again is tied to the success of the company, but he's just one of those unusual people who see the long-term benefit of sticking with us rather than trying to gouge in a drill program, I suppose. And we get a lot of drill contractors coming and seeing us, and at some point, I know that our current drill contractor, when this becomes much bigger, he won't have the rig, so we'll have to move to somebody else as well, So there's a lot of drill contractors surrounding us, but when I tell them we're drilling for, the first reaction is really. So but it's a key again, the cost of capital, discovery rate, trying to create not just a company. We don't want to be $1 billion company with a billion shares on issue still at $1, right? We want, and it's that share price appreciation, raising money at the right time, and creating that asset as quickly and cost effectively as you can.
What has the lab assaying time been looking like approximately? Not that it matters too much, right? Because you're drilling so much that it's always
we've got
continual.
so much banked up. But anywhere from days if we ask them to rush something to 3 to 4 weeks on average. And it's not just the assay contract. We started to build this with 4 rigs pretty quickly. And so we had a backlog that's now gone internally. So that backlog went to the lab. So it's just dealing with sensible numbers through the lab, and that's where we're very much are now. And actually, we're ready to increase our rig capacity with the team and the rigs available and the systems in place. So we're in a pretty good, from the machine. I call it the machine of just keeping the rigor going. Yeah.
So this gentleman that you're working with, who is also a shareholder, will he be able to accommodate 6 rigs, or is that beyond what he's capable of doing in terms of scale?
No,
or do you have to bring out another?
Absolutely, no. He's got more than enough rigs for us at the moment. But if we ever go to 10 rigs, then that may be a question. No, he's got 2 rigs. He's got 1 available for us today, and another one in the next few months. So that's all good.
So how much longer will the current expansion drilling, this phase of the expansion drilling, when is that poised to be completely done? And I take it you will, and what is the actual plan then? Or are you going to do this kind of the 20K to step out and expand and do the simultaneous 40K infill, or what is your thinking there, obviously? And when will you poke these holes down beyond the 1 km depth? Can you kind of give some color on what your thinking is? On, you have many options, right?
We're bulls in a china shop, and that's what we don't want to be. We've got to have a strategy around this, and that we do. So we're drilling 19 kilometres with 4 rigs at the moment, $8 million in the bank. I talked to you about an $18 million program. Of course, we need to raise capital, but we'll do that at the right time. There's no rush today, and we'll make sure that only shareholders will be able to participate first, and probably only. So if you want to have a part of this, you need to be a shareholder, and that's again, the fallacy of this business is people assume that everyone will raise money, raise at a discount and dilute, and then the stock price trade. So it's when you've got one of these discoveries early on, you can really focus on that capital management. The aim here, without a doubt, my training is Canadian. I'm a geologist, so I've seen share price appreciation through increasing ounces, staying on that Lassonde curve. So stay on it as long as you can. The other side of the coin is that you need to demonstrate how your system's holding together, and we've put a lot of work in over the last month to demonstrate continuity and why we're informed by that continuity and wireframing and the initial wireframing and the exploration target, etc. So we've got to continue down that path. We're getting engineers in now. We've had one working with us just sort of from a higher level, but now we've got that exploration target. We can start doing some conceptual mining work. How the hell will this be mined, and how does it hang together, and answering all those sort of questions that we need to. So we've got to do all that work, but nevertheless finding more ounces, and there's a hell of a lot to go, and just especially that area to the west of the drilling that we've done, the hole that I showed you, the 300 meters at 7 grams, there's not a hole beneath it. We're just putting one as we start there. Today, I think, is actually the start of the going under that target. So it will be absolutely, and again, cost of capital, drilling something out, you just just going through the metrics. An inferred resource, 40 kilometres, that's great. We will go down that path somehow, but not in isolation. If we wanted to drill that to indicated, it's doubling up the spacing essentially. So it's 4 times as much drilling, right? And that's not going to create the value for us when we're a $200 million company. If we're a $1 billion plus company and you're raising your money at that sort of share price and that valuation, then you may want to go and get your 10 rigs and start drilling it out. And that's that's what I was sort of hinting at before. So it's all around managing cost of capital, and as long as the project's just continuing to deliver, making it bigger, because 3 million ounces is the minimum you want to be in this space now. 3 million ounces will give you a 2 million ounce reserve, more or less, rule of thumb. 2 million ounces will give you 10 years at 200,000 ounces. So that's sort of the minimum that any mid-tier really wants to see these days. So anything less is somewhat irrelevant.
Yeah. So, I mean, essentially, I mean, you're committing. So you're bringing in 6 rigs. If I reverse engineer that quickly, that would mean that you're, if you say that 60K meters would take about 12 months with 6 rigs, that's 10K per rig in a year. So that would be, let's say roughly 30, 40 meters per day advance rate, right, per rig. That would be the reverse engineer calculation, no?
So, something like that. I think we're getting close to 30, but it is 6. It's 10K per rig exactly, and there's $12 million drill budget and then 18 company wide. Yeah.
So and you expect that? I mean, you're bringing in these rigs now, these 2 extra rigs. Essentially, it's going to happen within the next months, or what's the time?
We'll bring it in actually when we fund again, because at the moment we're funded, so that's just around funding the company, but at the moment 4 rigs is well funded through to the middle of the year.
Okay, and this funding event, you say it will be, I mean, I take it with the success you're seeing and with the strength of your shareholders, I would almost venture to assume that it will be completely funded by these people, because they're quite wealthy, and obviously they're very interested, or they're eager to own more of Southern Cross, I would imagine. So that's something that you can kind of do at time of your choosing. It doesn't seem like you're very strategically contingent on waiting for some particular result, or you're not really in that position at all.
No. It's more of much more of the former, without a doubt. That's exactly how we see it. So you've got to be a shareholder, and we'll treat all shareholders equally, but you've got to be a shareholder.
So let's say, I mean, when you get to the turn to age 2 in 2025, at that point, you will most likely have carried out this next leg of an 18 million company-wide budget that would have been seen through. What would you have liked to accomplish at the end of that time period?
Excuse me. Yeah, so I think 6 rigs, just a way to simplify it. I think 2 will be drilling out around that current exploration target. I think 2 will be drilling to the west, and drilling out that exploration target Mark 2. I think 1 rig will be drilling east and under Apollo and that area, and I think 1 rig will be drilling out bush, because you never want to leave your exploration upside to the end, because if you say we drilled out 3 million ounces and spend a lot of time and money doing that, and then we decide to go out bush and have a failure out there, people will somehow conflate failure 5 kilometres away to that 3 million ounces. So you always want to bring your exploration target or exploration higher risk coming through. So we'll have 1 rig out there, and remember the footprint of this exploration target is only 600 meters. So these systems can develop lots of ounces in a little footprint. So there's the upside and there's the challenge as well, to find these things. But we do have the recipe, if you like. It's soils, the old workings, and then doing geophysics, the IP geophysics especially, that maps the rails of that ladder, and the sulfide generally, which we see in induced polarization IP, is reflective of the gold as well. So So what would I like to see? I'd like to see absolutely that vision towards 3 million ounces, that we can sort of see where we're going today, right? There was a lot of guidance there, our forward-looking guidance, but we need to narrow that down, because that's when we start to become really relevant. 3 million ounces at 10 grams, very rare asset, billion-dollar plus company, right? And you can sort of see where we're going there. And then, like I said, it's going to continue much deeper. So putting those deeper holes in, we'll put some of those in this year, I'm sure, also in that mix of the rigs where we're going. But it only needs 2 or 3 holes down there to show that. It's not, you don't need to do too many. As well. So then, our 3 million ounces, once we've got there, needs to look like 5. So you've got to just always tack on, and we'll get that through going to depth, finding something else in the bush, and yeah, let's see where it all goes. It's very exciting, because 2 years ago, you couldn't have envisaged where we were going, just even in that little 600-meter band of the 10 kilometers that we've tested to date with more rigor.
Yeah, you've moved very fast. So when you say the bush, right, I immediately think, no, I might get east or west wrong, but I think it's to the east, where you have like 10 kilometers of further trend, right? It's not west. Well, you might, but you haven't done the soils there, so...
Yeah, no, it's easier to extend ultimately that 10 kilometres to the east, because that's where the old workings were predominantly.
Yeah, but west is not a closed book either.
West is not a closed book. There's probably close to a kilometre from where we are going west in terms of old workings, and right through to Christina, where I showed on that long section, is absolutely in play now. If we want to go further west, it's just you're getting closer to more people going west. Going east, sure. You've got no one. So it's just creating simpler outcomes by going east.
Yeah, and to the east, I mean, if you look at the soils, which seem to have been, I mean, the soils are flashing very red, where you're finding a lot of success now, and you have a similar kind of footprint, soil screaming at the surface for gold to the east. Is that the place where you will go right away and start to tag into there? And what do you think? What kind of holes will you more shallow?
I smile because I bet Kenny discussed that perhaps, and he's and the geological team are beating me over the head to go out there, but it absolutely needs to go there, but it's just doing it at the right time. And what we needed to do was get to that exploration target, and why we focused a lot of that drilling over the last 3 or 4 months around those very high-grade areas, because we knew we were onto something. Once we get those extra rigs, we'll be going and testing those targets. That one rig will be going and testing those along strike, and that I think that's the right time to start expanding out there. At the moment, we'll continue in that 1 kilometre trend at the moment. And if it comes 3 or 4 months, then we'll have a rig out there.
Yeah, so the kind of best case scenario, $18 million. The grade trend continues; it goes up with the stepping out, and also infill, or filling in the exploration targets,
expanding beyond the boundaries. Yeah, exactly.
Yeah. And then you have the backdrop of hitting a couple of deep holes and showing, okay, guys, major mining companies, this looks to be continuing way beyond 1 kilometer depth. And maybe you also are able to kind of step out a lot, these in the bush, as you say, kind of wildcat, to go to your other strong targets along trend. So that will be a very excellent outcome, and it sounds like a reasonable speculation, put it that way, for 12 to 18 million bucks. Sounds like a pretty good one.
It's a pretty good bloody speculation for 18 to 20 million bucks. That's right. No, they don't get those sort of pathways that often, and there's a lot of risk, and so it is speculation without a doubt, but educated speculation with a lot of that evidence at surface already, or in shallower drilling.
And then, I mean, the other aspect, which also is extremely positive, I mean, it's just the kind of the ability to move forward with the project. And you cover, I mean, your strength. This is your hometown. Obviously, that is helps. Everyone knows who you are and knows the people that work with you, and that's great. But also from a strategic point of view, with the kind of the permitting, you have the antimony component. Could you talk a bit more about that? I mean, what's happening? You can't tell us everything here publicly, but you say that you've been engaging with government. How could that crystallize, and how could that expedite development, putting this project into production at some point? Could you outline that a bit? And
yeah, just flesh it out. The social aspects of the project are the most important. So we just spent the last 45 minutes or so talking about the gold predominantly, but if you don't get the social aspects right these days, you're stuffed. to bring it into a more Australian lingo. So you've got to take that very seriously and realise that it is. So I put a lot of my time. My nature as a geologist is wanting to go out and look at the holes and plan the holes and be part of it. But now we've got a very good technical team that absolutely I trust, and I'm still there daily talking to them. But I'm now starting to put more and more of my efforts into because people want to see the person who's running the company and what ultimately their vision is and what's happening. So that's at every level. So from a local point of view, local stakeholders, meaning people who live in and around the project, like I talked about the native title holders and the municipality. And so far so good. There's vast support, not universal. You never get universal, but there's a small bunch of people who go, "What the hell? We didn't buy into this area for having a mine." But for the most part, people are very supportive because they're resource-based country people, so they get it. And then the native title holders becoming more and more and more important in this part of the world. And so we've been engaging with them from literally the day we started this company. We had a smoking ceremony to initiate the company. So we've been working with them. The Aboriginal leaders from that group come and sit with us at the Melbourne Mining Club, which is a 600-seat lunch every couple of months here in Melbourne. They sit beside us, and you know that just shows that we're working closely with them. The municipality will support us as long as we get those first two right. So that's one part of the foundation, you know, and we have Lisa living locally and the kids to the same schools as a lot of the people in all those groups, etc. Me coming from there is a nice mythological story, and absolutely it is important. You know, the local park in the town, the big town next to it, is named after my grandfather and all that. But if I behave poorly or do something wrong, it will mean nothing. So I think it's a nice story, but there's a bit more trust, of course. And it's a hell of a lot easier to work within your own tribe because you're a bit more of a known quantity. Then that's the first level. Then the second level is the state government, which is one part of the permitting authority. The state government here is left wing, traditionally not the friends of the mining business per se. You know, if you look at just politics and how the state government is actually sadly broke. This is all an event post COVID and a lot of policies. So they're by nature looking for development and income. And if we're supported, which we are today, we have the support of the state government. We're working with them very closely now. So we have a meeting every fortnight with the facilitation arm. They just put $25 million into building a facilitation arm of government to shepherd mining projects through the administrative and legislative quagmire. Let's say that. So that's very important. You know, that's green shoots. We've got 5 gold mines here in the state, producing more gold than we have for 100 years, and the government's putting in facilitation departments to help proponents through. So that's not a we don't want mining kind of place, and we've got mining and we understand it and we understand how it fits. So that's one other part, and we can permit this project through the municipal or state pathways, and so that's what we're working through now. And then you have the federal government here, and that's where the relationships with this critical material and some of the important aspects that I spoke about, antimony, and why it's important. And so we're dealing with the highest levels of Australian government and our partners worldwide. So what's that mean? Our partners, Australian partners today, are Japan and the US, and there's there's a real opportunity here with those partners to do something with that antimony offtake.
Yeah, so I'm going to be the one to say it, I guess, but we've seen the US grant money essentially for free to antimony projects domestically in the US, and obviously people who pay attention know that Australia has been a very, very important ally for the US, and the US is important, and vice versa, obviously, for kind of geopolitical reasons. So that's an incredibly interesting aspect. I guess you're not necessarily, I mean, you're still, as you say, in the very much discovery mode here. But could you kind of get, I don't know, could there be a dynamic where you're pressured into going through studies, or do you think studies would be engineering that would be funded in parallel for free potentially then? And when do you think that could happen? Could that happen already next year, or would that be a 26 kind of thing? What is it your picking, or is it something that can be strongly, I don't know, not forced, but strongly incentivized? I don't know what you want to call it.
Incentivized is the word.
Yeah.
Yes. Yes is the answer. I think it's not happening today at all, but I think
No.
I can envisage a time, and not too far ahead, where your concept comes to life. So, ultimately in the business these days, this exploration going to mining, we need to permit mines that are permittable. So
Yes.
what does that actually mean? That means, so many things. It means building a project that's acceptable to the local community. That means this is not going to be some giant open pit. This is going to be underground, and the technical nature and the grade of this obviously point that way. It means that if the local people really want it to happen a lot quicker, and other partners, that we may have to run a parallel. So, and some companies are able to do that very well. You stay on the Lassonde curve exploring, but go through a development mode at the same time. So you don't stop one to start the other. So I think that's probably where it could head, because we'd actually have a lot more traction on the antimony side if we're much closer to development, but that's not the strategy today. But I know if we if we were producing con, we'd have some very hot. No, I'm not talking about what I've just talked about before there, but just other parts of the world that are looking for antimony con. We'd have a lot more commercial arrangements in place, but it's just that time frame and the unknown about Victoria, right? That we always have to address, and you addressed. And is Victoria open for business? And when will you start producing? It's a big question, I guess.
But kind of psychologically in the political landscape in Australia, yes, you might have a state kind of lefty government there that they have their own incentives, so they need tax revenue, right? But if from the federal level, to my basic understanding, most of everyone in Australia politically kind of align with the US. I mean, so put it that way, or your allies. So if there is a very strong will to source critical minerals in Australia, that kind of triumphs the opposing force on the left side. And if that's a strong force from the federal level, that should also reflect to the state level. Am I wrong in the analysis, or is that?
No, well, I don't think
correct?
we see any opposition politically for this project today. Even it's just, when I was saying the left wing, it's not necessarily the natural supporters of the mining industry, but
Yes.
we have that support. So I just want to clear that up. But yes, I mean, if you want to really start talking, and I'm no expert, this is really off piss, but the Australians, the British, and the Americans have a new agreement called AUKUS, AU, UK, basically US. And AUKUS was all around nuclear subs and giving Australia ability to availability to that technology so we could build up our own nuclear sub fleet. But with that came other legislation. And there's one part of that called the Export Control Exemption legislation, which basically allows Australian companies to compete with US companies in the US space. And it's above and beyond the Inflation Reduction Act and all those kind of things. So that was only settled in December last year. So there's a whole lot of linkages that play to meaning that your analysis is potentially correct.
And then briefly on the offtake for antimony, there's not 100 antimony smelters and hubs in the world. So who would you see as kind of targets, also with respect to the strategic pointer where you have it can't be in China, right? Most likely.
Well, not today with the politics, right? It's amazing. We're the greatest. It's still the largest trading partner in Australia here today is China. So we have this yin and yang, and that's just an interesting part of being in Australia at the moment. But the Chinese and Russians control 82%. The Russians through their mining and Chinese through their processing. There is a smelter at scale in Oman, which I have visited with my colleagues, and we know the Omanis reasonably well. They have free trade agreements with the US, and that is the only antimony gold smelter at scale outside of China today. There's a number of smaller ones through Europe. In Belgium, you have, in Vietnam, in the US, there's a small smelter, but it really is the weakness of the Western world that it lost that capacity. The other interesting point just to talk about, and you and I have never spoken about this, so I'll throw it into you on camera, is that arsenic has now been added to the Australian and US lists. and I talked about keeping the arsenic down and producing a separate con. That just may be desired than less desired. And, we've as the West, not in my backyard. And today, arsenic is 100% controlled out of China. 100. There's not a supply chain in the Western world. So what's arsenic used for? It's semiconductors and it's munitions, and we just think rat bait or something like that, right? So it's all these strange things that are happening around the world as sort of the West gave up on, and it got too difficult and not in my backyard, and the Chinese were smart as hell in cornering these markets, and now everyone's running to catch up.
Very fascinating. I wasn't aware of that component. I guess just briefly, we shouldn't linger too long on that, but the arsenic, what's it's mainly associated with? Because, do you see, because you see this, as you had in your presentation, this transition to the more ductile environment to depth, does the arsenic footprint change with that style of mineralization, or is it just associated with gold, period? What's the distribution, I guess?
So the arsenic's in pyrite for the most part in the top part of the system. And then you get the antimony in the top 700 meters. When you get below into that ductile zone, the antimony actually starts to drop off.
Yes.
and the arsenic starts to partition more into a mineral called arsenopyrite, which is arsenic iron sulfide rather than iron sulfide with a bit of arsenic. So the sulfide becomes more arsenic rich, if you like. We've done all our met work in the top part of the deposit so far, so we've still got more work to do. We know that at least there's a large component of free gold because we see it down at depth. But keeping and maintaining that free gold will be a key part of the metallurgy of this. And so the gold is not locked up in the arsenic. That's really where I'm going there, where it is in Fosterville. Excuse me. So we call that refractory gold. and that's not the case here. But so we go from an pyrite or Arsenian pyrite to arsenopyrite to answer your question.
Yeah. And then briefly, I guess, you are going to drill at Redcastle. So we should at least talk about that, what that program looks like and what you are testing for. So could you kind of give a synopsis of the project and what you will do there this year?
Yeah, so again, it's all just mixing and matching those meters. We struggled to determine how we were going to put those 6 rigs in and around Sunday Creek, and then obviously one of those, in terms of budget, has to come out of that budget and go to Redcastle. So we do like Redcastle. Actually, I thought that was the first project drilled when we started Southern Cross. So I thought that was the one that was going to deliver. It is the strike extensions of Costerfield. There's 17 kilometres of historically mined veins. If you just add them up, and because they're thinner veins, that's what Costerfield is. It's a thinner vein system. They mine something like 10 to 20 centimetres, and then dilute out over 2 meters. And they're very, very high grade, many ounces. So that's what Redcastle is, because that's what Costerfield is. We've drilled 10 centimetres at 700 grams there. So very high grade, but very thin. But you dilute that out, and that's 10 meters at 7, not so bad, right? So not that we're going to dilute it out to 10 meters, but just to give you that. So we're onto a high grade part of the system there, and we've got a very big IP anomaly, so it's sulfidic under at depth, and remember, these systems get better at depth, and they've never really been tested. Well, Costerfield's testing at depth and finding this transition and very high grades. So there's opportunity to do the same. So there's, I think we put 15 holes into Redcastle when we first started, and there's a hell of a lot more to follow up. But the first follow up is in and around that 700 gram over 10 centimeters, and the biggest geophysical anomaly in and around that, and trying to find just the grade that fits. But again, I do struggle with testing a target like that when we've got something that's, so, literally, I shouldn't use these terms, world class, because I'm not meant to use those under JORC and 43101, but I'm talking socially here. So yeah, that's just the balance, right? But we do need to continue to spend money on these projects to keep them alive too. So that's the other input. So we'll go there and drill some holes.
And Costerfield and Kenny makes this point and kind of highlights how Sunday Creek is more favorable in that sense, because you can hit many veins at the same time. At Costerfield, that does not seem to. I mean, that's quite tricky if I understand from the morphology of the deposit. It's very expensive to define out a resource of that nature. So at Redcastle, are you trying to test something to depth, and what would the conceptual target be? Is that also these kind of long veins that go like this, as I understand the Costerfield to be, thin, or would that be something else to depth? Would it look different?
No, I think it looks like Costerfield. It's the exact extensions and everything we know from lots of mining that took place at Redcastle in the upper levels. Is that they are going to be thin veins that are going to be very high grade. They're going to be continuous for hundreds of meters, and that's what makes Costerfield a mine, because it has continuity through hundreds of meters in strike and depth. But they are very, very thin and singular. We've got 42 of them already at Sunday Creek, and there'll be more found, and we don't have the strike extents. We've got 20 to 100 meters of strike, but we've got lots of these things, and they're very continuous going down. And then Fosterville is a different beast again. They're all the same thing, manifesting differently. So Fosterville's in older rocks, so they're in like Z-shaped rocks, and it's where faults hit at a high angle to the bedding. So this is the bedding, and that intersection is where the bodies form. But and the Swan Zone was something like 3 meters thick on average, so which was a very high grade part. And then it's got a lower grade salvage of the refractory mineralization at Fosterville. So they're variations on a theme, all of them.
But the business case for Redcastle you're thinking is, I mean, if you can, I don't know how much you would need to kind of make that an attractive asset for maybe acquisition for the people
Well,
mining it.
that's
Yeah.
right. I mean, there's an obvious way that we can spend, and we actually acquired a key core part of that. We paid $300,000 for a little prospecting license where that high grade hit came from, actually, that I was talking about. So we're onto the grade. Once you're onto the grade, you can start to follow it. And we've got that geophysical anomaly under it, and it is going to depth, but sort of the 200 to 400 meter depth. We're not talking too deep at the moment. We'll just stick to closer to the high grades and see how it develops. But it doesn't need huge expenditure and doesn't warrant huge expenditure when we need to focus on the main business at hand. But those two other projects, have some ability to monetize them in the way that you're talking. I concur, and we'll just see where we go. But at the moment, they're better in our portfolio until we work out exactly where to go with them.
And then very, very briefly, just to add on that, to give people an opportunity to make up their own minds, who operates Costerfield? What kind of reserve do they have left? Essentially, how likely is it that they would want to acquire something in the proximity? Would that be a need in the short term, or is it not really necessarily?
Sources, they're very good operators. We know and respect them hugely, and they've been very helpful for when we started here in Victoria. So they've got, Costerfield's always been one of those smaller mines, that it's Australia's only antimony producer today. It's the 5th largest antimony mine on earth, even though I just said it's a smaller mine, but they produce something like 70 or 80,000 ounces of gold equivalent a year. I think they've been producing anywhere between, a number of years ago, 4,000 tonnes of antimony a year. I think it's just above 2,000 now. So as that transition's probably taking place, and there's some other factors that their antimony outputs are decreasing, but so they've 3 to 4 years, I think, is sort of their reserve base, and that's probably as good as Costerfield's looked for some time. I think maybe 2 or 3 years ago was out the 5 years. So they don't have a huge amount of time left in that project, but that statement's been made for 20 years at Costerfield, so they'll continue to find things, I think, but maybe Redcastle is all part of that. Yeah.
And then kind of to almost close up here, to give people a sense of the Australian landscape, when do you think Sunday Creek will kind of become, like, as everyone knows about it, and maybe it's always already happening, that you have like serious corporates in the room potentially offering to buy it out, to give people a sense? Because obviously, if you reach these goals, this will be, as you say, a world-class project on paper as well. It will be showcased. When do you think you will start to get significant interest from that point of view?
So I love the way you asked that question too. So you're prodding me to see if there's already interest, no doubt. And we're all under CA in these kind of exercises. But the way I answer that question is that it was my job for a decade to go and learn about other companies, or part of that job. So it would behove. Well, that's not the way to say it. You'd be very surprised if companies weren't doing their tire kicking exercises and learning what we've got, right? So that's just how the industry works. So it would be disingenuous, I think, in the word, to suggest that nobody's looked, right? So that's the answer to that question. I think this is my philosophy in terms of Victoria. Fosterville was a great deposit. Before that, it was pretty average, and now it's a great deposit with a future that really nobody's looked at, and it's probably going to be around the 250. I don't know. It's not our deposit, but I can see sort of it landing at the 250,000 ounces a year, something like that, and having a mix of the high grade components and then the more traditional refractory components. If you add Sunday Creek to the mix, then it makes a plus, 500,600,000 ounce production centre. Now, that doesn't mean that the owners of Fosterville will buy this. Maybe it could be the owners of Sunday Creek will buy that. But I think together they have an operational synergy, just in terms of being so close and dealing with the same government and similar communities, etc., etc. So that's a vision I do see. But at 200 million market cap, we talked about capital cost and the like. We're not here to sell this project at all. We're here to develop it towards a mine, whatever that may look like. I'm a geologist, so if and when it does become a mine, it's not going to be Mike Hudson managing the day to day, but that the company is much bigger than Mike Hudson, so it will look a little different. But there's no interest, and that's a very fair assumption. We think this is going to become a much bigger asset, so why not give our shareholders that opportunity rather than some other company's shareholders?
Yeah, and it does strike me as, the shareholders are aligned with you in that vision. There wouldn't be, you don't really see a situation where a hostile takeover could be orchestrated. That's not really on the table.
Certainly not while Mawson's sitting there. And Mawson's we've got more than 70% shareholders aligned. So Mawson is actually a very, when it's distributed, it creates a more diverse portfolio of shareholders. But at the moment, no, we're fairly well protected.
And then we always like to ask the final question, right, to kind of summarize everything, and that's your 3-year vision for Southern Cross. Where will you be in 3 years from now?
Yeah, so the 1-year vision is working towards the 3 million ounces. I suppose then we'd like to have a resource absolutely of significance at 3 years and demonstrating this is a 5 to 10 million ounce system. That's where we'd like to be from the permitting point of view. I would like to think that we're very close to being permitted, actually. Because of the political cycle, we could be earlier and permitted. And remember, the permitter project that's permittable, that also comes into political cycles. So I think some asset of real significance, and you can sort of see where it's heading after a year or so of lots of drilling, and a project that's been de-risked from the permitting point of view. And if that's the case, then this company is going to be worth a hell of a lot more, and we can come back and speak then. I'm sure we're going to speak beforehand, but replay this interview in 3 years' time and see how we've gone, Jorn.